Hey guys, what's up? This is Andrew for TrendLineses.com. So I'm back, guys, to make a big update on AMC. A lot of things happened this week. Bulls are taking back control. So let's see exactly what happened and let's try to see what can happen next. Let's get into it. All right, guys. So AMC daily time frame. Where can I start? So in my last video, guys, it was last week, so it was bam. We were again around 14.5, guys. So what happened? We tested this level for the fourth time. So it was starting to get weak, but bulls managed to push the price action higher. It all happened in 3 days, I would say. So it started with the 8th of Feb, where we went to the 17.4 level, all right? So it was here, guys. So this was a resistance. So basically, where is the resistance area here in this downtrend? What we are doing here, guys, we are looking for a bullish signal. So to find a bullish signal, we first need to find the level where you have the resistance, where bears are all gathered and waiting, to sell. And this level here was created by this trend line, right? The yellow trend line you can see, guys, here. So I'm monitoring this trend line for quite some time, and you can use the 20-day moving average as well, which is often going to give you the same level as the resistance trend line. So here, this level was here around 17.4, guys. And like I said, everything has been done in 3 days. So we had some good news. We had some lease agreement with Unibail-Rodamco. There is a debt restructuring that is happening as well. I think that AMC wanted to issue $500 million of bonds. So it's a bond offering to restructure the debt. And actually, they're going to do twice the size, which is good news because it's going to help them to have a lower interest on the futures payment. All right, so this is good news, guys. And we have the earnings coming in March. So I think that this earnings will be good, guys. And we are in the buy the rumor, I hope not sell the news mode. But it seems like investors want to buy AMC at the moment. So what is the situation, guys? We had this breakout. So let's analyze. So the breakout happened on the 9th of Feb, guys. Once again, because of all this, news that was coming, the global market was looking good at that time. I'm going to do a global market video in 2 days, guys, where I'm going to show you that the bull trap has been actually set by bears, and that I don't know what will happen, but it's not looking good on the global market. But for now, guys, let's go back to AMC. So we had this breakout, all right, above this 17.4 level. So let's analyze first. Once you have a breakout, usually bulls are taking back control, but the breakout needs to be good quality breakout, what I call a good and reliable breakout. So to know if it's a good and reliable breakout, we need to check the volume, the volatility, and the momentum, guys. So let's start with the volume. The volume was low just before the breakout, which is good. And then we have this volume increase all the way up during the breakout. Okay, so that's looking great. As you can see, we had 3 bullish days with the volume growing each time. And during the breakout, the volume was very high. So this is good. But what is not good, guys, is that we have this red day that is higher than everything else that came after. So that's not good. For breakout to be really good quality, we would like to see a volume that was greater than all the red days before. Or I mean, at least greater than the red days that happened not long ago, like this one. So the volume analysis is not perfect, but it's still good enough for this breakout to be followed by more buyers. Then volume, it's done. Volatility, guys. So we need to check if the price action was contained in a tight range, in a nice consolidation before the breakout, and if basically there was this period of balance between bulls and bears just before this breakout. If it was the case, then it means that the breakout once again will probably be followed by more buyers. So to know that, you just check if there is a consolidation. Here the consolidation is not perfect, guys. We have a consolidation that happened, okay, here, true, but what I like to see is a consolidation really close to the trend line. And this consolidation is not perfect. So we need to use another tool to assess if the volatility was low enough during this breakout, and we have the Bollinger Bands, guys. So let's use that, and I'm on a daily time frame because I'm checking a correction that is lasting for 3 months, so the daily time frame is adapted. Once again, guys, what I'm doing here is actually what I'm explaining in my course, which is about breakouts. So I'm here showing you guys a little bit what it is about, and it is about actually using the momentum, the volume, the volatility to understand what is the market sentiment and to use breakouts as an entry signal, as a buying signal whenever you have a correction that seems to be over. All right, but there are many checks to do, so that's why I'm showing you here a little bit what it is about. And in my course, guys, I'm of course giving you all the different techniques that you need to know, for example, to enter, then to exit once you're in the trade. So I basically try to make everything as clear as possible, guys, to show how I like to take my trades and what is, to me, very efficient. So for those who want to know more, just click on the link in the description of this video. For now, it's still the Elliott Wave landing page. I'm working on the new landing page, but just subscribe to that so at least I have your email and you will be sent the information whenever the course will be available. And of course, we're going to get the discount. So let's go back to what I was saying here, guys. So the Bollinger Bands are not extremely tight, let's be honest, but they were getting tighter, all right? So here I'm assessing if the market paused for long enough for bears to really, be out of this trade, all right? Whenever you have a pause that is very long, okay, like, I don't know, for example, here you see the market pause for quite some time, then it means that bears are not attacking AMC anymore. And so bulls can take back control using a catalyzer such as some news and a breakout, okay? Here, the consolidation is not perfect, all right? And I can say that visually, and I can say that using Bollinger Bands because they were tight, but not as tight as they could be, all right? So I would say the volatility indicator is telling me that this breakout is good, but not incredible. Then I'm going to use the momentum, guys. So I'm going to get rid of the Bollinger Bands. Volume has been done, volatility has been done, and momentum, guys. The momentum is telling me here, as you can see, the MACD is going higher between December and January, while the market is going lower. You guys know that this is a bullish regular divergence, all right? So whenever you have a bullish regular divergence, it means that bears are tired, they are out of steam. It doesn't mean that the move down is going to stop. It just gives you one information about the fact that the move down is slowing, all right? And then if you have a breakout like we do right now, guys, this is a breakout once again, okay? And if we have a breakout associated with this bullish regular divergence, then you are in a very favorable environment to take long positions. All right, so here we are, guys. So to conclude, this breakout is tradable. It's a good breakout, but it's not a perfect breakout. So as it is not a perfect breakout, what could happen in this situation is at least a retest of the breakout area or a fake out, okay? So it's impossible to say what is the probability of a fake out. I would give it a 30% chance from here, roughly, using my experience. And I would use fibs in this situation to know where this retest might potentially go. And usually in this situation, so once again, this breakout happened after a very sharp move down, we usually see some retests that come quite deep. So the 61.8 fib retracement is around 16. This is the breakout level as well. I have the 20-day moving average around 17. And I have the 38.2% of fib around 18, which is a very nice support as well. So in this situation, I would say that what could happen this week, because this is why you guys are watching this video, and as you know, I usually give my view. So my view is that we're probably going to retest the 18 level, okay? And there is, I think, a high probability we go slightly lower. So maybe to the 17, worst case 16 level, okay? So my view is that maybe Monday, Tuesday, Wednesday, I don't know, early week, we see maybe some dip, and that after that, we would go higher. This is in the situation this breakout is holding. So let's see if it does. Once again, I give it a 70% chance it does. So let's see what will happen. And if it does, this is the scenario that could happen. And after that, guys, it means that this entire move is complete, right? This move here, okay? So we would at least go to the 38.2% of this move down, all right? So the 38.2% of this correction would be 25, but I don't have anything around 25. So I'm checking what is the closest resistance to this 25, and it's here, 26.5. So my take is that we dip a little bit. We come back again in the range 18-21, as you know, guys, and I've been sharing that information all the week in my Discord. 21 is a resistance level. I personally sold some calls at this level as I bought those calls before. So it's like selling some covered calls, and I'm gonna buy back this position a little bit lower. And I think we might go back in the 18-21 range for some time and then break it on the upside and go test the 26.5 level. So when, I don't know, guys, but you know, just visually maybe around early March, mid-March, you know, maybe after earnings, you know, this is a possible scenario. And after that, we would probably need to correct a little bit and look at the big picture, guys. The big picture is here. So once again, I can't be sure this breakout will hold. It looks like it will hold, okay, to me, even if it's not perfect. And if it does, the big picture, guys, is this breakout, all right? And this is the level you really want to see broken. And ideally, we would like to see it broken perfectly. So we'd like to see a consolidation here, all right, on low volume, then a breakout, a retest, and then we would go higher. So this could happen around April, May. Okay, it will be related a lot to first the earnings that we're gonna have here, the COVID crisis. Are people really gonna be able to go back to cinema? It's also gonna be related to the Fed rates policy. Are they gonna be more hawkish or dovish that the market thinks right now? I don't know. So if the global market finally stops dropping, you know, maybe around March, April, this could be a good environment for AMC to really do its nice move up that we are waiting for so long. So that's it for the technical analysis, guys. So this is my view. I think we're gonna have kind of, you know, some ups and downs this week with a support around 16, the lowest level, and I don't think we're going to break above 21 this week, guys. I think we need one more week, then break out above 21, go to 27, consolidate, and hopefully break out above this blue trend line that is the long-term correction we are trying to stop. Okay, now let's have a look, guys, at the information about the option market. The synthetic short, guys, the regular short, the DTC. Okay, let's check all of that. So last week I did a video. I told you guys that the synthetic short on AMC was 0%. So it's like the total short. So basically you have some long position that is coming from the put options, all right? So right now we have 3% of synthetic long, okay? And the synthetic short has grown because as you can see, bam, now we are at 4%, but if I subtract the synthetic long, which I should do to get the entire position, we are at 1.3% right now. So we are positive again because the synthetic short is growing, guys, on the upside, okay? Because of all this massive call options that we have here. So we are back in positive territory. And just to show you an example, if AMC goes to, I don't know, 28, okay, the total synthetic short would go to 4%. Okay, guys, so we're gonna have synthetic short again on the upside. What else I wanted to show you? So right now the synthetic short is 1.3%, but the maximum synthetic short has grown, guys. It was 12, it is 14.7. So we are starting to go back to some levels we've seen a few months ago. All right, let me show you that. Bam, I'm here, as you guys know, keeping all the information. So on AMC right now, so last week we had, so you see the synthetic short was 0.1, so slightly positive, but not that much. Right now it's 1.3, but the maximum synthetic short has grown from 12.7, this column, guys, to 14.7. So it means that a lot of call options have been bought. Okay, guys, first thing. And you can see that before in, you know, November, For example, it was around 20, guys. So we have lost a lot because of Jan 22 expiry, but we can see already, guys, in 1 week, it took 2%, guys. So this is good news to me. Once again, I'm not saying to go and buy this out of the money call options where the volatility is quite expensive. So, you know, they can generate a lot of profits if there is a squeeze, but if there is no squeeze, it's like, you know, a very good trade for market makers. So maybe it's not good to go there. I don't know, but what I know is that this is the information I want to see to know that the movement on AMC is still on. And now, as you guys can see, it has grown by 2% in 1 week. What else do we have? This was 5th of Feb, as you can see. We have the DTC. Where is the DTC? Bam. So same. No big difference in the DTC. We went from 2.1 to 2, okay? So we're still far from the 3.5 we had in November when we almost squeezed, guys. Okay, so this is the information. This is rather good news to me. I still don't have the new regular short interest as of 28th of Jan. The data is not available yet. It's gonna be next week probably. So for now, the total short is 20%, guys, all right? So it's still very substantial. Okay, there is still a lot of short on this market. The 145 strike has grown from 5.5, I think, to almost 6. So once again, it's maybe not good to go and buy it, but some people do it, and it's gonna create troubles for option market makers if we start to squeeze. So this is, to me, good to see that. And to conclude, we can check the max pain for option expiry on the 18th of February, guys. And as you can see, so this is the payoff of all the options that expire on that day. And you can see that the lowest P&L is here around 20. So this is the max pain, the maximum pain. And it means that market makers are going to try to push it towards this direction, all right? So it's not always happening like that, but it's a good indication because, you know, this is what is better for them. So usually they will try to push it there by selling and buying on the market, of course. So it's 21. So that makes sense for next week. I think that we would finish in the range between 18 and 21. This is in line with my analysis. So let's see. Let's see, guys. What else can I tell you? It's pretty much that, guys. It's pretty much that. We can check where is the biggest option, but we know it's going to be around the 20 strike on the Feb 18th. Bam. Yeah, you see the 20 strike is huge, guys. So once again, when we're going to go through it, we're going to make big moves. And ultimately, if the max pain is respected, we're going to get back to this level. But if we go through it, it's going to be big moves. So a lot of ups and downs around the 20 level is a scenario that makes sense for the coming week. So that's it for me, guys. I hope you enjoyed this video. And if you did, please don't forget to click on the sub, like, and bell button so you're going to be the first to know when I upload anything new. And stay close to shore. I'll see you guys.